Hi guys, well welcome to another trading session with me, Greg Secker, your host in the Trading Den. And today I'm going to be looking at some 180 phase changes. I'm also going to show you how to use some of the tools inherent in SmartCharts that aren't available in other trading applications. So today I'm going to focus on a number of different currency pairs, and then I'm going to show you some of the tools you can use just to add more degrees of confidence to your trading plan. Remember, if we just have one kind of element that we focus on without factoring in other instances, other elements that are happening on that trading screen, we very much leave our profitability, our success up to chance. So I'm going to start today by going straight in. If I go top right hand side of the screen where it says no strategy, I'm going to pull up that 180 phase changer trading strategy scanner. I'm going to click the first one, which is the Australian dollar against the Canadian dollar. So you've got two commodity currencies here, both trading against each other. And we can see over the last 10 or 12 days here, that this currency pair has yielded some pretty decent returns or some pretty decent results in terms of the strategies within which it has been calling. So I'm going to kick off here with looking at the Australian dollar against the Canadian dollar. Now, let's go back to my drawing tool. I'm not sure if I've introduced you to this before, but this is the drawing tool inherent within SmartCharts too. So I click drawing itself and I go to freehand tool. So freehand tool effectively just allows me to show you what I mean by a phase one and a phase two movement. So a phase one movement is the price movement of that phase moving consistent with the trend. So of course, this would be phase one, and then we'll have a turning point here, and this will be phase two, this will be phase one, this will be phase two. And if you look at the cyclicity of this trend movement, we're calling the beginning of a phase one movement here. Now, to confirm that movement of that phase one, starting off again, which again would be a downward movement, short, consistent with the trend, remembering we're looking to sell on this position. If I zoom in a little bit, you can see that the spot, or the blue spot which caused the entry, should be 1 pip lower than that previous bar, and that previous bar was consistent in that phase two movement. So this phase movement, or this phase one movement coming down here, says, should this bar that we are currently looking at, remember this is on the, if you look top right hand, this is the 4-hour chart. If this market breaks below this low here, we would look to take an entry. If I'm not sure what that level is, I can do a number of things. I can put the crosshairs on and measure it myself, or easier still, just hit the red button and then it brings the levels in and it shows me that the sell entry would be at 188.55, the stop loss would be 188.28, and take profit would be 188.29. So that entry there is 1 pip below the low of that previous bar. That would be the sell entry. A few other things to be aware of though, looking at this chart. You'll notice that there is a small red line, which is some hours ahead of trading activity. And that red line indicates there is a news announcement coming out on the Australian dollar. So remembering SmartCharts factors in news announcements. In fact, what SmartCharts does quite cleverly is we take all the major news sources and then we pump it straight into the chart, and we display those news announcements when they're expected and anticipated, and we show them as a red line on the chart so you know what's coming. That means you don't have to leave the application and go elsewhere and try and find what's happening with those relevant currency pairs. The system knows which currency pairs you're trading and what you're looking at. Then it goes out and finds any news that is pertinent to that and then displays it on the chart when that news release is going to be released. So if you want to know what the news release is, what the forecast is, what the actuals are, and really what the significance of it is, you simply click the red dot at the bottom and it says the number 2 if you look at the screen, which means there are in fact 2 news announcements. You'll see that there's obviously 2 spots at the top of that blue box, which indicates 2 announcements coming out at that time. And it says, this of course is the Royal Bank of Australia interest rate decision. Of course it's Australia. The previous was 0.75%. The forecast is 0.75%. The actual, well of course that's to be confirmed when? In the next 16 hours and 45 minutes, and that's important. So this strategy has a time horizon, and it also had, meaning it had time horizon for completion as to when you expect it to hit its target. The question you want to ask yourself is this likely to hit its target within this range? And the answer to that question is yes. we know that it's likely to hit its range. In other words, from where you enter the position to where it stops out either for a loss or, most importantly, to its profit target, should happen within the next 2 or 3 bars. That would be within the range of 8 to 12 hours. This news announcement isn't anticipated until 5:30 in the morning, tomorrow my time. If I click the next button across, I can see it's just then the statement. Of course, it's linked to that previous interest rate decision. And so we know that there is a time horizon between where I am here. So if I draw that on the chart, coming back onto drawing and freehand tool, I can say, well, from entering the position here to when the news announcement's coming out, which is here, there is adequate time between those 2 points for this trade to work its way out. So we can know that we'd be entering here when it hits the blue spot. We're looking here to make around 26 pips. You can see that if I look to the left-hand side, it'll detail exactly what my profit target is, what my loss target is, looking to make around £2,000. This trade is good to go. There is a good free fall between this position and here. So there's nothing here which should indicate that the trade would necessarily stop out. It's a perfect movement if you consider you've had phase 2 moving back to phase 1, you've had phase 2 and then it's coming back up, turning around with an entry at phase 1 as it takes the low out of that previous bar. So that position is good to go. Australian dollar against the Canadian dollar, great cyclicity, both being commodity currencies. That's one we'll stick on. Okay, so let's go and have a look at the next one here. Again, we're at 180 phase changer. We're picking this time the Aussie Swiss, next one down in the pair. And again, this beautiful cyclicity, this phase 1 to phase 2, nice broadening of the moving averages. We can see a few things. We can see, first of all, we have got a separation, if you notice, of the moving averages. Now watch this. This is relatively important. There's a separation of the moving averages from, if I take my freehand tool, from here to here. Now, that's not ideal. So if you notice in this area here, notice how the moving averages came together. As they did, they broke away, nice run movement, and then we're back into phase 1, back up to phase 2, phase 1, back up to phase 2. Notice the length of the phase 1 cycles are twice the length of the phase 2 cycles. Let me show you that. So we have a nice phase 1 cycle here. That's movement of price with the trend. Notice the length of that cycle. If you look here, if I use the measuring tool here, let me go from where the signal was originally called. This is going back in time. So we're looking at the previous one to give us an understanding of how valid the following one is, which is the one we're looking at trading. So I'm looking back here to phase 1 and I'm saying this is my phase 1 movement. So from here to here. And what we've got is 32 hours in time. So remember, this is a 4-hour chart. So it's 32 hours in length for this phase 1 movement, which is phase 1 movement is the price moving down with the downtrend. Now let's measure the phase 2 movement, which is that counter trend movement back towards the moving averages. So again, I click on my drawings tool, I go to measure, I go price and time range. I'm going to go from here to this bar here. Yeah, so here we've got, again, so 12 hours, this is 45 pips, it's a third nearly of the movement. It's 3 bars, it's only 12 hours. So we know that our phase 2, which is counter trend, moving back up towards the moving average, is only 12 hours in length as opposed to 32 hours. So a much shorter phase 2. And then let's have a look at what the next phase 1 movement is. If I measure that, again, time and price range, and it's from here all the way down to here. And difficult to read the timing on this because it goes over a weekend, so it's saying 68 hours. So ignore the 68 hours because in time it's 68 hours because it's factoring in a weekend, but most importantly it's 5 bars here. So it's double the length of the previous, which was 3 bars, or nearly double the length of the previous, but some way towards the length of the previous one, which was 8 bars for the phase 1. Then you had a little phase 2, which is 3 bars, and this one is of course phase 1. And then your next phase 2, which is starting here. Let's just measure that quickly. And you'll see this one's much shorter in length. Again, just 3 bars, or 2 bars in fact, 43 pips, and now, so what we've had is this extension, small pullback, smaller movement down, and then we're expecting another potentially smaller movement down. Why do I think potentially smaller movement down? And here's why. Because if you notice the distance between the two moving averages, what we're really looking for is a separation of the moving averages, and then when the moving averages pull together, like they've done back here. So they're close, they've pulled away, and then when the moving averages have had a good pullback, and then a strong pullback to those moving averages, where those moving averages pull together tightly, we then expect an explosive move downwards, which is what happened previously. Now we're seeing the ranges starting to tighten up. So they've gone from 8 bars to the phase 1, to 3 bars to the phase 2, to 5 bars to the phase 1, to 2 bars to the phase 2, and now we're looking at entering a new phase 1. The moving averages themselves have widened. So the probability of this one producing a decent run compared to what happened previously is minimized. For that reason, this trade will be left alone. Okay, so let's take a look at some trend wave trading strategies now. I'm going to look at the Kiwi Swissy starting there. Now, I like the look of this position for the sole reason that the cyclicity looks great. Very, very clear, very, very reproducible, very consistent cycle length. Let me show you what I mean by that. Take a look at my drawing tool. If this is where the beginning and this is where the end of the phase 1, phase 2 cycle, so this would be the phase 1 piece, and then from here this is the phase 2 piece. That is my phase 1, phase 2 cycle. I've got a very similar picture taking place down here, haven't I? So let's just show you what I mean. Again, freehand tool. This is my phase 1, phase 2 cycle. Okay, this is phase 1, turning around to phase 2, and again, a signal calling beginning of phase 1 again. Now, I might ask the question, well, how big is this phase 1, phase 2 cycle? Let's go back to my drawing tool, go to measure, go to time and price range. In fact, let's just do time range. I'm only interested in time range. So here I can see that the time is approximately 19 hours, 19 bars. This is, of course, a 1 hour chart. So I know that. If I go to the same thing here, again, measuring that phase 1 range. So from here to here, again to that spot, very similar, I should imagine. 18 bars, so very similar in time length. Your phase 2, which is the movement back to your moving averages, are very consistent. You can eyeball and see that. You don't need to even draw that in. But the nice thing I like is that when the signal gets triggered, look back here where the signal got originally triggered. I'll just put an arrow on there so you can see. Let's take, when this signal got triggered, the moving averages were close together. Then they separate, of course. Now they pull back together. Then they separate again. Now they've pulled back together. We have an entry now being called. You can see that. Let me just move the chart over now. Notice how I moved the chart on SmartCharts 2 right out of the way because I'm using what's called a grab tool. If you look at the options for how I can change my cursor, I can go from crosshairs to markers to arrow to grab tool. Grab tool literally means I can move the chart anywhere I like. So I'm putting it here. If I hit the sell order setup button, which was glowing red, default risk is 2%. I've got a sell entry here at 162.68 with a take profit at 162.13. It's a 13 pip movement. We've got a stop loss here at 162.40. Nice looking trade, right? We've got very consistent cyclicity. We've got some predictability. You'll notice there's no news ahead, which means there's nothing to really scupper the trade, as we can see. So let's hit the green button. Let's get the trade placed. And of course, cross fingers, hope and pray. No, just kidding. We have everything here lined up. We've got good cyclicity. We've got a lovely entry. We have the pip 1 pip below. This nice small bar. Remember, there's a nice bit of indecision here. If you look here, you've got a nice high test bar with the open and close very close together. Indicates indecision in what? Moving upwards. Great. That means if the next bar, this one, breaks lower than that low, you've got a nice entry here, 13 pip movement. should set itself up for a couple of £1,000 profit. So that's a good trade on. That's Kiwi versus the Swissy. Let's check back in on that trade later on and see how well it does. Okay, so we're going to look at another trend wave strategy here. This time we're going to just drop from currencies and drop into gold. Many currency traders are commodity and currency traders simultaneously. There is, of course, that commodity trading index, which demonstrates the link between movements in currency pairs and commodities. So we're going to look at gold now on the 4-hour chart. And the reason I like to drop into this position is, despite this in PMI manufacturing numbers, it's not a big deal for gold. But what is interesting is that the cyclicity here and the uniformity of the price range movement indicates to us that we could be on for a little rally and if we hit the green button, it'll give us the movements here. So about a 78 pip movement, which would give us about £2,000 profit. It's a buy entry at around 1581 spot 11 with a price target of 1588 spot 99 and a stop loss of 1573 spot 23. Let me just move that back slightly. That just right adjusted. And so we've got an entry here above. Now look, there's a nice low test here, which tests right down to the range. You've then got a very nice small entry bar, which is just breaking above the high of the previous bar. Nice looking trade inside the range of the previous price range activity. So there's not much to inhibit it from going higher. It's a simple one to get on. It's a 78 pip movement. It's one we like the look of. We like the uniformity of this trade. And so it's one I'm entering right now. Okay, so we've placed some trades now. Let's go back to the trades screen where I can see my pending trades. If I click on the pending tab, these are my pending trades. We'll revisit these in a few hours and see how well they're getting on. So if you like this video, don't forget to hit like. If you haven't subscribed to the channel already, make sure you get yourself on the subscription list. You'll be able to see all the new videos as we post on this channel. Until then, I look forward to seeing you on the next video.